Exposing the myths in gold investments. Welcome to WealthWise. Gold is not a get-rich-quick scheme and nor the best investment option told by the so-called media gurus, followed by advertisements of their own gold shop. Let's have a balanced discussion. Gold. The very word evokes images of wealth, power, and enduring value. For millennia, this precious metal has captivated civilizations, serving as a universal currency, a symbol of status, and a store of wealth. From the ancient Egyptians to the modern investor, gold has held a unique allure, transcending time and geographical boundaries. But in today's complex financial landscape, characterized by digital currencies, volatile stock markets, and geopolitical uncertainties, does gold still hold its weight as a relevant and lucrative investment? Recent market trends suggest a resurgence of interest in gold, with investors flocking to its perceived safety amidst global instability. The yellow metal, often viewed as a safe haven asset, tends to shine when traditional markets falter, offering a hedge against inflation and economic turmoil. But is this recent surge in gold investment a blip on the radar or a sign of a larger trend? And how does gold truly stack up against other investment avenues in the current economic climate? This essay delves into the golden question of the moment. Is gold a wise investment in 2024? We'll examine recent market data, compare gold's performance with other asset classes, and analyze the factors influencing its price trajectory. By understanding gold's historical context and current market dynamics, investors can make informed decisions about incorporating this precious metal into their portfolios. Whether you're a seasoned investor or just starting, understanding gold's role in today's market is crucial for navigating the path to financial success. So stay tuned until the end. The first quarter of 2024 has witnessed a notable uptick in gold prices, signaling a renewed interest in this traditional safe haven asset. After a period of relative stability in 2023, gold prices surged by approximately 12% in the first 4 months of 2024, reaching levels not seen since late 2020. This surge can be attributed to a confluence of factors, including persistent inflationary pressures, geopolitical uncertainties stemming from the ongoing conflict in Eastern Europe, and growing concerns about a potential global recession. Data from the World Gold Council reveals that global gold demand surged to 1,174 tons in the first quarter of 2024, representing a 12% year-on-year increase. This surge in demand is particularly evident in the investment sector, with gold ETF holdings experiencing their largest quarterly inflow since 2020. The increasing appetite for gold is indicative of a broader shift in investor sentiment towards safe haven assets, as market participants seek to protect their wealth from the eroding effects of inflation and economic volatility. Furthermore, central banks around the world continue to bolster their gold reserves, adding to the upward pressure on prices. Data from the International Monetary Fund shows that central banks accumulated a net total of 125 tons of gold in the first quarter of 2024, marking the 11th consecutive month of net purchases. This buying spree by central banks, particularly in emerging markets, reflects a growing desire to diversify reserves away from the US dollar and other fiat currencies, further solidifying gold's status as a safe haven asset. The recent surge in gold prices and demand is not merely a short-term blip, but rather a reflection of deeper economic and geopolitical trends. The combination of inflationary pressures, geopolitical risks, and a loss of confidence in traditional financial systems is driving investors towards the perceived safety and stability of gold. As we move further into 2024, it remains to be seen whether these trends will continue to propel gold prices higher, but the current market dynamics suggest that the yellow metal is well positioned to maintain its allure as a safe haven asset. Gold versus the rest, weighing the investment options. Gold's appeal as an investment lies in its unique characteristics and its historical performance as a store of value. Unlike fiat currencies, which are subject to inflationary pressures and government manipulation, gold is a tangible asset with intrinsic value. It cannot be printed into existence, and its supply is relatively limited, making it a hedge against inflation and a potential safe haven during times of economic uncertainty. However, gold does not generate income or dividends like stocks or bonds, and its price can be volatile in the short term. Investors looking for steady income streams or rapid capital appreciation may find other asset classes more appealing. Stocks, for instance, offer the potential for higher returns through dividends and capital gains, but they also carry higher risks, especially in volatile market conditions. Bonds, on the other hand, provide fixed income payments but are susceptible to interest rate fluctuations and inflation. Real estate is another popular investment avenue, offering potential income through rentals and long-term appreciation. However, real estate is illiquid, requires significant capital outlay, and is subject to local market conditions. Commodities like oil and agricultural products can provide diversification and inflation protection but are prone to price swings driven by supply and demand dynamics. Digital currencies such as Bitcoin have gained prominence in recent years, but their extreme volatility and regulatory uncertainty make them a speculative investment at best. When considering gold alongside these other asset classes, it's essential to remember that diversification is key to a well-balanced portfolio. Gold should not be viewed as a replacement for other investments but rather as a complement that can help mitigate risk and preserve capital during periods of market turbulence. Its historical role as a safe haven asset, its ability to hedge against inflation, and its low correlation with other asset classes make it a valuable addition to a diversified investment strategy. Safe haven or speculative bet, assessing gold's role. The recent surge in gold prices has reignited the debate about its role in a modern investment portfolio. Is gold a safe haven asset that provides a shield against economic storms, or is it merely a speculative bet driven by fear and uncertainty? The answer, as with most things in finance, is nuanced and depends on an investor's individual circumstances, risk tolerance, and investment goals. Proponents of gold as a safe haven asset point to its historical track record of preserving wealth during times of crisis. During periods of high inflation, economic recessions, or geopolitical turmoil, gold has often held its value or even appreciated while other asset classes faltered. This inverse correlation with traditional markets makes gold a valuable tool for diversification, potentially mitigating losses and reducing overall portfolio volatility. However, critics argue that gold's safe haven status is more myth than reality, pointing to periods when its price has failed to provide a safe harbor during market downturns. They argue that gold's price can be volatile, driven by speculation, investor sentiment, and factors unrelated to its fundamental value. Furthermore, unlike productive assets like stocks or bonds, gold does not generate income or dividends, making it a less attractive investment for those seeking current income or long-term growth. The truth, as always, lies somewhere in between. Gold can indeed act as a safe haven asset during certain economic environments, particularly during periods of high inflation, currency devaluation, or systemic financial risk. However, investors should be wary of viewing gold as a guaranteed safe haven or a one-size-fits-all solution to market volatility. Its price can fluctuate, and its performance is not always inversely correlated with other asset classes. Ultimately, the decision of whether to invest in gold depends on an individual's investment objectives, risk tolerance, and overall portfolio strategy. For investors seeking a potential hedge against inflation, a store of value during uncertain times, or diversification benefits, gold can play a valuable role in a well-balanced portfolio. However, it's crucial to approach gold investments with a realistic understanding of its limitations, potential risks, and historical performance, avoiding emotional decisions driven by fear or speculation. Conclusion: navigating the golden path in 2024 and beyond. As we navigate the complexities of the 2024 financial landscape, marked by persistent inflation, geopolitical uncertainties, and the lingering effects of a global pandemic, investors are presented with a myriad of choices when it comes to preserving and growing their wealth. Amidst this backdrop of uncertainty, gold, the timeless allure of this precious metal, continues to captivate investors, offering a potential haven from economic storms and a hedge against the eroding effects of inflation. While gold is not a guaranteed path to riches, nor a replacement for other asset classes, its unique characteristics and historical performance make it a compelling addition to a well-diversified portfolio. Its ability to act as a store of value during times of crisis, its low correlation with traditional assets like stocks and bonds, and its potential as an inflation hedge make it a valuable tool for navigating the uncertainties of the current market environment. However, investors must approach gold investments with a balanced perspective, understanding both its potential benefits and its limitations. Gold is not a get-rich-quick scheme or a guaranteed safe haven. Its price can be volatile, and its performance is not always inversely correlated with other asset classes. Thorough research, a clear understanding of one's risk tolerance, and a long-term investment horizon are essential for success in the golden game. The key takeaway for investors in 2024 and beyond is that diversification remains paramount. A well-balanced portfolio, carefully allocated across asset classes including stocks, bonds, real estate, and commodities, can help mitigate risk and enhance returns. Gold, while not the centerpiece of this portfolio, can serve as a valuable supporting player, potentially offering stability during turbulent times and preserving wealth for generations to come. As with any investment, knowledge is power, and a thoughtful, informed approach is the key to unlocking the golden opportunities that lie ahead. Thank you for watching our video on gold investments in 2024 and beyond. If you found this information helpful, please like and subscribe to our channel, WealthWise, for more insights and updates on financial strategies. Stay wise, grow wealthy.